In a stunning turn of events, Evergrande, once a behemoth in China's property development scene, is set to be expelled from the prestigious Hong Kong Stock Exchange. This dramatic fall from grace has sent shockwaves through the global financial community, leaving many to ponder the implications of such a colossal collapse. Let's dive into the details and unravel the story behind this corporate giant's demise. Evergrande's meteoric rise paralleled China's emergence as a dominant force in the international arena. However, its recent descent into chaos has cast a shadow over the world's second-largest economy, sparking concerns about the potential ripple effects. To shed light on this complex situation, Nova Safo, host of Marketplace Morning Report, engaged in a conversation with Jennifer Pak, Marketplace's China correspondent. Below is a transcript of their enlightening discussion, edited for clarity. Nova Safo, Evergrande's staggering debt, exceeding $300 billion, has reached a critical juncture, with the company being ordered to liquidate. Could you walk us through the origins of this crisis? How did Evergrande amass such an enormous debt? Jennifer Pak, timing played a crucial role. Evergrande's inception in 1996 coincided with a period of explosive demand for housing in China. The company capitalized on this demand, fueled by easy access to cheap credit, a trend prevalent among many property developers at the time. However, Evergrande stood out for its audacious approach to expansion. Safo, while this strategy propelled Evergrande to success, it also paved the way for its downfall, didn't it? Pak, indeed, the company's debt levels became unsustainable when home prices stagnated and credit tightened in 2021. Beijing's clampdown on borrowing, coupled with a slowdown in housing sales, left Evergrande struggling to meet its financial obligations. Safo, is there any hope for Evergrande to restructure its debt and find a way out of this predicament? Pak, unfortunately, the prospects look bleak. Evergrande's primary source of income, the property market, is currently in turmoil. In the past, the company generated revenues of around 500 billion yuan, $70 billion annually. Today, achieving even a fraction of that figure would be a significant achievement. According to real estate analyst Yan Yuejin from eHouse, additionally, Evergrande's lavish spending on ventures like a soccer team, an electric vehicle company, and ambitious theme park projects akin to Disneyland has further strained its finances. The Chinese government, wary of perpetuating such extravagant spending, is unlikely to offer a bailout. Safo, Evergrande's impending delisting from the Hong Kong Stock Exchange comes as no surprise, given the circumstances. Correct? Pak, absolutely. The suspension of Evergrande's shares in Hong Kong since last year has rendered them virtually worthless. Delisting simply formalizes the reality faced by shareholders. Safo, what about the individuals who invested in properties that Evergrande promised to build but failed to deliver? How is the broader property sector in China faring amidst this turmoil? Pak, Chinese authorities have taken steps to address the plight of homebuyers, instructing local governments to complete unfinished units. Although the quality of these completed apartments may be subpar, at least they provide some form of resolution for affected individuals. However, the overall health of the property sector remains fragile. Since peaking in 2021, housing prices have plummeted by a staggering 35%. Safo, recovering from such a severe downturn appears to be an uphill battle. What lessons can investors draw from the Evergrande saga? Pak, experts caution against falling for investments that seem too good to be true, much like Evergrande's enticing double-digit interest rates. Moreover, relying heavily on debt to fuel growth is not a sustainable business model in the long run.